The average person who's listening, too many people, think that they can go into this very difficult zero-sum game of betting against the consensus and be right. You know what I mean? In other words, investor says, I'm going to go in the markets, I'm going to make money.
Betting against the consensus and be right.
Right, because
Okay.
the consensus is built into the price.
Okay.
Okay? That's what's the, so think of it as like going to a horse race and there's handicaps. Okay? You're not going to pick the best horse and you're not going to pick the best company. A terrible company can be a better investment than a terrific company. A terrible company can be a better investment, just like the terrible horse can be a better investment, because the odds that are changing, like you go into that and that becomes the long shot. But because the long shot is going to pay off 25-1, right? If he comes in, that you could just as likely bet on the long shot as the leader, and it's going to be equally likely that you're going to make money, right? Otherwise the market would be doing the opposite. Well, the market is like that, right? In other words, if everybody believes that something's going to be terrific, okay, then everybody's betting on it, and its price is high. So it's not what's best necessarily. It's what's best relative to what's in the price, what's discounted. So as an average investor, why diversification so important? In order for you to win in the game, like you're going to go in and pick what's a good investment, you are playing against others. You have to realize that, because it's all in the odds. It's like when you go to the track, you're going to have to play against the handicappers, okay? So it is very difficult for you to beat me or to beat others who are putting 1,500 people and hundreds of millions of dollars into how to win in that game, right? And there's a lot of people, and I find it challenging, I find it difficult. So it's difficult to win in that game. It's difficult to win in that game individually by placing the bets. It's difficult to win in that game. It's more difficult to succeed in the markets than it is to succeed in the Olympics. Okay, but people don't realize that. They think I'm going to go have an opinion.
Sure.
Okay, but there are more people trying to do it in the markets than are trying to do it in the Olympics, and so nobody would say I'm going to run and compete in the Olympics. When you realize how difficult that is, okay, but you can diversify well. Anybody could diversify well. So if we look at what the world will be like in 5 years or 3 years or 1 year, okay, like we're coming in the presidential election. We have all these things going on. Okay, you want to bet on it? Okay, wise guy, give it a shot. Is that easy?
That's what you're doing?
Okay, well, the only way I can do it is I need to diversify my bets well. I wouldn't want to concentrate on any one of those.
So you're not.
And I'll take, like the casino, I'll take that bet, and I'll take this bet, and I'll take a bunch of those bets. But for you as the average investor, you're probably not going to even be able to pick which horse has got the edge relative to the handicappers, okay? And so diversification, that is the thing that I would say, particularly for anybody, it is the most important thing. It's if you know how to do that well. So that's why I'm saying, you know, that page, those couple of pages here was something I wanted to pass along to people.
You'll see a lot of people will say that's a boring formula. Diversification is a boring formula. It's outdated, et cetera, et cetera.
I'm just trying to say, I went from nothing. You asked me, okay? My dad's a jazz musician, middle class or low middle class family. I had nothing other than parents who cared for me, and I could go to a good public school. And that was the only thing I had. And if I took that and I say, okay, here I am with the things that has happened over the markets and making money and building a business and so on, there are a limited number of principles that I want to pass along to people, because I think if they can get those principles, that would be extremely valuable. And this is not boring. So when I come back and you say, okay, that arc in life was not boring, that was a very successful and exciting arc in life, and this is one of those principles. So if you take diversifying well, how to diversify well, please go understand that principle. It's only a couple of pages. Please go understand that principle, because when you have savings and you think, how much money do I need for my kids' education or my retirement or whatever it is and so on, and if you don't know how to do this well, you're risking a lot. And if you do it well and so on, it produces an enormous amount of opportunity.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
So you have 1,500 employees here. How many of them do research for you specifically tied to politics? Are you guys focused heavily on studying what's happening in politics as well, regulation, laws, all that, or not really?
We need to. We need to, more so today than we have ever had to. Well, because we're in a period of time which is very much like the late 1930s. There are three main things that exist today and are the biggest forces in what is happening that did not exist before in our lifetimes, but existed in the 1930s, okay? And if you look at history, they repeat themselves. And the first is that there's a very large gap between the rich and the poor, and as a result, a big gap in politics between the left and the right, okay? It's become more extreme, and in this coming election, it will be more extreme, and around the world, it's more extreme. That's why we see the rise in populism, okay? That has very big implications on how the economy will work and how taxes will happen. Let me give an example. The corporate tax cut, which happened, was a big boost for stocks, because you own a stock and they pay less taxes, the stock is worth more, the company's worth more. If there's let's say a Democrat elected, there's a high probability, almost certainty, that would be rolled back.
Sure.
So one of those or another matters, and it matters in a lot of different ways, more than it ever mattered before. So item number one, the wealth gap and the political gap. The second factor, interest rates are close to zero, and the printing of money to buy assets is not as effective. In the old days, in the normal days, if the economy didn't do so well, you'd hit it with a little jolt of stimulation. You'd lower the interest rate, and put some cash out there. You give it a hype, and then it goes, okay? When you get to zero, or close to zero, you can't lower those interest rates. So we're close to that level in the United States. We're at those levels, negative interest rates in Europe, negative interest rates in Japan. That baby ain't gonna work anymore. When you try to lower that, in terms of that won't happen, okay? That's limited. And then what they do is they go out and they print money and they buy financial assets. And that is not working as well, because what happens is when you buy the financial assets, it goes into the hands of who own financial assets, investors. And what they do is they put it into more investments. That notion of putting it into more investments makes those investments go up in price, which is great for the people who have the investments, but not so great for the people who don't have the investments. It widens the wealth gap, and it's its own challenge. And it's not going to be stimulative, and you'll see it. So item number two that didn't exist in our lifetimes before, but did exist in the late 30s, is that. Item number three that exists is that there's a rise of a power to challenging an existing world power. China rising to challenge the United States. And if you look at through history, when there's existing world powers and there's rising of a challenging power, there is a conflict. There are conflicts. And they've led to wars. In the last 500 years, that's happened 16 times. And in 12 of those times, there were wars. There are four types of wars that happen simultaneously. We always think shooting each other and sending people and bodies into wars and that kind of war. But they all have four types of wars. They have a trade war. They often start with a trade war, 1930s, Smoot-Hawley tariffs. There is a technology war. There is a geopolitical war, like is happening with China. What will it mean for Asia, Asian countries? And there's a capital war in all of these cases. So, for example, just recently, the Trump administration said that they're considering shutting off capital to China, a certain flow of capital to China. Well, it's not happened before. You have to go back to World War II. And in World War II, and in a number of wars that other countries have had, they have a capital war, which means that they could say, the Trump administration could say to the Chinese, you know those $1 trillion of bonds that you own? well, we're not going to pay you, or we're going to do this or that. These types of wars, and how does money flow? I just wanted to make clear that at number 3, so these are factors. 1, wealth and political gap, extreme. Number 2, monetary policy can't, so if we have a downturn and they're at each other's throats, serious. Number 3, the conflict with China. These things have played out. Now, when you ask, how do you play the game in China, U.S., that's a conversation, but I just wanted to clarify that the nature of the dynamic.
That's powerful.
So now when you look at why is politics more important today than it was, because that will determine in the markets what will happen in the markets and the economy, right? And number 1, that wealth gap, who you elect will have a big economic and market impact.
Tremendous.
Number 2, the absence of monetary policy will have a big market impact as to what will be done. And number 3, this geopolitical war, which involves those 4 things, technology and so on, will have a big impact. So that's why it's more important than ever.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.